With Bitcoin now once again failing to hold $100,000, many investors are wondering if the Bitcoin bull cycle could be over already. So let's look at the data to see if this is really the case. Today we're going to be looking at whether the Bitcoin bull cycle top could already be in and where better to start than the MVRV Z-Score chart we have here on BitcoinMagazinePro.com. So first and foremost, by almost all metrics, we have not already peaked in this cycle. We'll go over all of the data supporting that, but just because BTC has experienced a 10+% retracement doesn't mean it's all already over. In fact, the Bitcoin strength that we're seeing to hold these prices around $100,000 in spite of some less than favorable macroeconomic conditions and some fairly decent sell pressure we've had over the past few weeks and months just shows Bitcoin's strength and resilience. And what we can see from the MVRV Z-Score here, which is looking at the relation between the average accumulation price of all BTC on the network and the current price of Bitcoin, is we still have considerable upside room to go. We're currently seeing values on this of around 2.7, beneath 3 essentially, and what we can see is pretty obviously we have plenty of upside room to go before we start getting into this massively overheated red territory up here. And just to acknowledge, we may not reach values that we previously have in other cycles. This time around, we might not get values of 7 or 8 plus, but even still, even if we only reach values of 5 or 6, we're still ways away from that. And if we just remove the Z-Score and just look at the standard MVRV, so we're not standardizing for any volatility or standard deviation, again, we can see this is currently at a value of about 2.36, significantly below the values of around 4 we usually see in Bitcoin cycle peak territory. So still plenty of room to go. In fact, we're still lower than what we set in the all-time high we set around a year ago in March 2024, around $74,000. So according to this, plenty of room to go. And what we can also see alongside that, looking at something like the spent output profit ratio, we're actually seeing less and less realized profits, even as Bitcoin has been declining. We did see, if we just zoom in over the previous few months here, as Bitcoin has rallied up to above the $100,000, we did see a fairly substantial amount of profit taking, which makes sense if you've been holding BTC from just a few $100s potentially and you see the price now at $100,000. That's probably some pretty life-changing gains you could realize. So it obviously makes sense that we saw some profit taking around that level, but this has actually noticeably decreased over the past few weeks, indicating that maybe a lot of sellers have maybe taken their foot off the gas slightly, which does potentially give us some positive expectations over the coming weeks that maybe the trend can shift a little bit and we can hopefully rally to higher highs. But if we look at something like the value days destroyed, this really reiterates this idea that maybe the largest part of sell pressure that we've seen may be behind us. Again, if I just zoom into the current cycle, what we can see is pretty much similar to what we saw in the previous metric, just the spent output profit ratio. We've seen a huge decrease in sell pressure over the past few weeks. Bitcoin has now kind of normalized $100,000 and 6-figure territory. And even though we have broken beneath that once again, it doesn't necessarily mean that the Bitcoin bull cycle is over. In fact, we typically see drawdowns of 20, 30, even 40% multiple times during Bitcoin bull cycles. And the fact that in this one, we've rarely seen anything above a 20% retracement, again, really reiterates how Bitcoin has matured and grown as an asset. And now, again, we're seeing less and less people, especially those longer, large-term holders, begin to take profit on their positions because they're really realizing the opportunity that we have of potentially seeing considerably higher prices, taking into account the institutional inflows. We're seeing MicroStrategy and just Bitcoin as an asset growing and maturing and being more and more accepted in the world of finance. And what we can already see is, what we can see from pretty much all on-chain metrics is that doing what the majority are doing well, doing the opposite of what the majority are doing is really what you should be doing. Counterintuitive trading is really the best approach. And what we can see is a majority of traders are now short BTC. Looking at the Bitcoin funding rates, we can actually see that these have recently turned negative, indicating that a majority of open derivative positions are now betting on further downside for BTC. And historically, these get punished pretty brutally. What we can see is multiple instances as soon as we see overwhelmingly negative funding rates. This really indicates a potential short-term bottom in the Bitcoin price action, especially as we are still within a bull cycle. And I know we may be slightly overextended, but that doesn't necessarily mean we need to experience more downside. I think just some more choppy consolidation could be on the cards. But what has caused this retracement in BTC? I know we're all saying that maybe we have already peaked, but looking at the data, that doesn't seem to be the case. But we are still seeing a little bit of retracement in the Bitcoin price action. Now, I think that is mainly due to the discussions of quantitative tightening continue, especially in the US economy, and just a lack of liquidity coming into markets. And what we can see is this does make sense, looking at something like the global M2 money supply on a year-on-year basis versus BTC. And again, just zooming in over the current cycle, we can see over the past few weeks, this has declined quite substantially, indicating a contraction in most government balance sheets and how much printing we're seeing. And alongside this, if we just go to the Fed balance sheet, again, this kind of reiterates this. We're not seeing expansion in balance sheets, and we're still seeing this quantitative tightening as global economies and central banks try and prevent rampant inflation and any type of recession. But what we can see again is in this is actually easing up slightly. The rate at which this is decreasing has decreased. So hopefully we do see a change in that trend. And looking at articles from some of the world's biggest banks and researchers, here we've got one from JP Morgan, they're actually anticipating an end to the quantitative tightening and potentially a transitional shift to quantitative easing, where we finally see those money printers turn on again as early as mid-2025. So I think we're potentially on the cusp of a more favorable economic condition shift. But either way, if we are to see a continuous decline in the BTC price action, if we are to decrease even further, then we are approaching the short-term holder realized price, which we actually nearly tested a few weeks ago, but we're about a few $1,000 off as we retested $90,000. But now this is sat at about 91.5, but climbing to around $92,000, we'll say. So if we are to continue declining slightly, then that might be a good place to watch out. But really, as we said, this is pretty normal price action. If we just zoom out on the weekly time frame, for example, Bitcoin over the past couple of years has spent most of its time ranging. What we can see from the bottom here is we had, we'll say, 63 days of ranging here, and then we had an expansion, and then about 220, 230 days of ranging here. Huge expansion, and then we had multiple months of ranging price action here, totaling up to, what's that, around 600 days of the past less than 2 years of Bitcoin's price action just ranging, just not really doing a whole lot. So it does make sense that we're seeing price now once again begin to range. We have this very slow grind up, which is actually very healthy for Bitcoin's price action to kind of move up in these stages, almost step up. It resets expectations, allows new capital to form in. And if we just rally exponentially, people don't want to buy in after a 20, 30, 50% rally to the upside. Once we have this consolidation and cool off, people once again start dollar cost averaging in. And it really reiterates what's likely going to be support if we are to see any further retracement. But if I just remove all of those and go back to the daily time frame, what we like to look for with all our analysis is confluence. We don't like to just look at one metric in isolation. So we can see from a macro perspective, things are definitely not looking too bearish for BTC. On the short term, maybe we can see a bit of a further retracement again as people maybe irrationally begin to short and look at danger signs that we're seeing in traditional markets. But if we are to draw a support level, say around here, and a resistance around here, again, we're just creating a range that we've spent most of the last few years within. And if we are to retrace further to this point, like we said, we're looking for confluence. This is actually now aligning with that short-term holder realized price at around $91.5, $92,000. Again, aligning pretty much exactly as we come up to around here. So I think this would be a very strong level of support if BTC is to decline even further. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your #1 source for Bitcoin analysis. So just to summarize, Bitcoin has now experienced a retracement of over 10%. And once again, traders are now worried that BTC may have already peaked from this bull cycle. But what we can see is from a macro perspective, there's absolutely no evidence that this is the case. And the only outcome in which that maybe could be a possibility is if we have already kind of begun a big global recession and TradFi bear market due to the correlation Bitcoin has with US equities and specifically indexes like the S&P 500. If we've seen a top in markets like that and we're about to see a multi-year drawdown, then of course Bitcoin is going to struggle to rally to new highs. But what we can see is as we are seeing a shift, from quantitative tightening to potential quantitative easing, but hopefully just being around the corner, it does seem unlikely that we've already topped across all markets. And even if we do retrace a little bit further, pullbacks like these in the Bitcoin price action are incredibly normal. The fact that we're only about a 10% drawdown from our all-time high and still showing strength, really indicates Bitcoin's maturity as an asset. We usually see 20, 30, 40, 50% plus pullbacks during a Bitcoin bull cycle. So if we are to retrace even further to around that $92,000 level, if anything, that would provide a great DCA opportunity with a really strong risk to reward for potentially higher prices not too far away. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are below in the comments and on social media. Do you think Bitcoin has already peaked this cycle, or do you think this is just a good opportunity to reaccumulate at a discount? As I said, let me know. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.